Hi everyone, my name is Yong Sheng. Today me and my group member Yang, Hong Jin, Yong Chi, Chu Yi, and Teo Chong Seng are going to share to you guys about Top Glove Corporation Berhad. So let's start now. As you can see, this is our table of content. We are going to talk about introduction of the company, accounting concepts, chart of accounts, relevant documents, ledger entries, payroll entries, correction of errors, and finally trial balance.
My name is Iki, and today I'm going to talk about introduction of Top Glove Corporation Berhad. Top Glove Corporation Berhad is the world's largest manufacturer of rubber glove. Tan Sri Dr. Lim Wee Chai started this business in Malaysia with one factory and one glove production line, has today captured 26% of the world market share for rubber gloves, and the company has manufacturing operation in Malaysia, Thailand, China, and Vietnam, these 4 countries, and it has marketing office in USA, Germany, and Brazil, and export to over 2,000 customers in 195 countries worldwide. Top Glove offers a wide and diverse product range, fulfilling demand in both the healthcare and non-healthcare segment. Now they also offers other products like face masks, dental lamps, exercise bands, and household products. Their mission is to ensure safe human protection globally. Vision is to be your world-class partner in glove and healthcare production. They are renowned from producing high-quality gloves at efficient, low cost based on its time-proven business direction. And Top Glove has set its sight on higher aspiration, which include becoming a Fortune Global 500 company by 2035. And yes, come to their business philosophies is they will work for their customer and ensure that their employees continue to contribute positively in the company, and they will take good care of the well-being of their employees, and they will also take care of the interests of their shareholders. Lastly, they will work closely with their bankers, suppliers, business associates, and government authorities and friends.
Now I'm going to talk about the accounting concepts. First is the going concern. Going concern concept means that it is assumed that the business will continue to operate for an indefinite period of time and that there is no intention to close down the business, reduce the size of the business by any significant amount. For example, non-current assets shown in the balance sheet will appear at their book values. So how this can prove that the business is applying the accounting that if business is expected to cease to operate in the near future, assets will be revalued to their expected sales values. Now we move on to the second accounting concept. The second accounting concept is accruals. Accruals can be also known as matching. It means that the revenue of the accounting period is matched against the cost of the same period, timing of actual receipts and payment. For example, to adjust the item of incomes and expenses in an income statement for amounts prepaid or accrued. I'll give you an example now. If you earn a 10,000 of product sales in April, your company will give you a 1,000 in April. So the matching principle stipulates that the 1,000 commission should be reported on the April statement along with the April product sales of 10,000. Okay, so now I'm going to talk about the third accounting concept, which is realization. Realization emphasizes the importance of not recording a profit until it has actually been earned. So profit is only regarded as being earned when the goods from the seller to the buyer who has an obligation to pay for those goods. For example, profit is realized only when the goods actually change hands. So when customer place an order from you, no profit is earned until they pay the money to you and you passes the goods to them.
Good morning everyone, my name is Teo Chong Seng, and today I would like to talk about chart of account. Firstly, assets. Assets are resources with economic value owned and controlled by individual, companies, or countries and are expected to provide future benefits. Assets are reported on the company balance sheet and are purchased or created to increase the company value or benefit the company operations. The example of asset will be goodwill. Goodwill is an intangible asset related to the purchase of a company by another company. Specifically, goodwill is the part of the purchase price that is higher than the sum of the net value of the fair value of all assets purchased during the purchase process and the liability assumed during the process. The value of a company brand name, solid customer base, good customer relations, good employee relations, and proprietary technology represent some reason why goodwill exists. The company goodwill total value up to 980691000. Secondly, liabilities. Liability include all of your company debt, including bank loan, mortgage, unpaid invoice, and any other money owed to others. A liability to do so. The example of liability will be trade and other payables. Trade and other payable is a supply charge the company for good delivered or service used during the company everyday operation, which are referred to as trade payable. If the bills are paid on credit, the amount are placed into the company accounting software account payable module, where they will display in the account payable aging report until they are paid. The company trade and other payable total value up to 810,824,000. Thirdly, capital. Capital is the fund provided by the owner to improve the business level by supporting business project or operations. It is the owner requirement for the total asset of the enterprise. Capital is not always money or cash. It may be building, land, car, and more. The example of capital will be retained earning. Retained earning is the cumulative amount of earning since the corporation was formed minus the cumulative number of dividends that were distributed as dividend to its stockholder. The total value of retained earnings for the company is 3131530,000. Besides that, expenses. Accounting expenses are the money or cost that companies spend to generate revenue. Essentially, account fees represent the cost of doing business. They are the sum of all activities that are expected to generate profit. The example of expenses, there are director remuneration, income tax expenses, and more. And director remuneration is the process by which the director of a company obtains remuneration through fees, salary, or the use of company property, with the approval of shareholders and the board of directors. The total value of the director remuneration for the company is 132,900,000, excluding benefits in kind. Lastly, revenue. Revenue is the amount a company receives from selling goods or providing service to its customers and clients. A company revenue which is spot on the first line of its income statement is often described as sales or service revenue. Hence, revenue is the amount earned from customer and client. The example of revenue. Sales. Sales in accounting is a term that refers to any operation revenue that a company earns through its business activity, such as selling goods, service, product, and more. The total value of sales for the company is 7237,427,000. That's all.
My name is Chu Xing Yi, and now I will be presenting about related documents. Top Glove Corporation have prepared and received many documents for daily transactions. The first document is invoice receipt. It is a document supplier sent to the business when there is a credit purchase. Next, credit note issued. It is a document issued by the supplier, which is Top Glove in this situation, to deduct the amount in the invoice. The reason to reduce is incorrect quantity of goods. Next, invoice issued. It is external
document sent by Top Glove to the customer when there is a credit sales. Next, credit note received. Credit note received is a document issued by the supplier to Top Glove to check for the faulty goods and to deduct the amount in the invoice. Now is electricity bill and the water bill. They are both expenses of the company. Top Glove have to pay the electricity and the water use. Next is receive payment from debtors. This is the payment by debtors to business to pay for the credit sales. And the payment to creditors is paid by the Top Glove to supplier for the credit purchase. And Top Glove will receive a receipt for payment. In this document, it contains the details of payment received. The last document is remittance advice. Remittance advice is a document sent by the customers to seller as a notice of payment.
Hi Miss, I'm Win Song Yang from Group 1. I'm presenting the Part E ledger entries for Top Glove Berhad. For ledger entries, we have few categories, which is income, expenses, cost of sales, non-current asset, non-current liability, current liability, and capital. So for income, they have three categories, which is sales, interest income, and other income. For the total sales for the year is 7.23 billion. Interest income for the year is 23 million, and other income for the year is 33 million. And for the other part, which is cost of sales, they have a total cost of sales for the year is 4.38 billion. For the expenses, unfortunately, we are not able to show all the expenses because it's a lot. So we are just presenting one of it, which is the administrative and general expenses. And the total of it for the year is 551 million. And let's move on with the non-current assets. They have property, plant and equipment, right of use assets, and biological assets. And for the right of use assets and biological assets are remain unchanged. So, but for the property, plant and equipment, they are increased from last year is 2.48 billion, and this year closing balance is 3 billion. For the current assets, they are 8 billion, and this year closing balance is 3 billion. For the current assets, they have inventories, trade and other receivables, and other current assets. And inventories, they have a closing inventories of 530 million, and the trade and other receivables reduced from 800. The trade and other receivables has reduced from last year closing balance 832 million to 798 million. So this means that the owing from the trade receivables are becoming lesser, and which can reduce their bad debts. And the other current assets are increasing. From last year, closing balance is 63 million, and for the current year 2020 closing balance is 74 million. And let's move on with the non-current liabilities. They have loans and borrowings. The current liabilities, they have trade payables and income tax payable. And the first current liability is trade payable. They have a closing balance of 810 million, and their closing balance for income tax payable is 126 million, which means they are yet to pay 126 million for their income tax. And for the non-current liabilities, they have one and only loan and borrowings. The balance from last year is 1.37 billion, and the balance brought down for a year for now is 226 million, which is a big gap reducing for their loan and borrowings. They are repaying their loan and borrowings by their cash for the year. Their total repayment of loan and borrowings is 1.15 billion. Yeah, and the last one is the capital. Capital, we have share capital, and we can see that the share capital are increasing from last year. They have a closing balance of 788 million, and for the current year ending is 1.65 billion. And that's all for my presentation. Thank you.
Come to payroll entries. Payroll entries is to record the compensation paid to the employees, and it includes wages and salaries, wages control, EPF payable, SOCSO payable, and income tax payable.
Hi, my name is Hon Jin. Today I will be presenting about correction of error. In today's world of accounting, humans might tend to make error while recording their ledger entries. Today I will go through some of the common error with Top Glove. The first error will be error of omission, which means the whole transaction has been overlooked and has not been recorded in any side of the books. So we can take the slide as an example. The purchase of laptop 3,950 by check has been completely omitted from the books. So to correct this error, they simply just have to record the transaction back itself to the book. Coming to the second error, error of commission, which means the double entry is wrong, but it is recorded in the correct class of account. So let's take the slide as an example. Payment of rental expenses of 19,020 to Lim Wee Chai was wrongly entered to Li Wee Chai. So to correct this error, just simply make a debit to the account that was supposed to be debit and credit the account that has been debited wrongly. Coming to the third error, error of principal, which means the double entry itself is correct but in the wrong class of account. So let's take the slide as an example. The purchase of printer machine 3000 is debited to the purchase account instead of the machinery account. So this could be resolved by crediting the wrongly debited account and debit the correct class of account. Coming to the fourth error, error of original entry, which means the double entry and the account are recorded correctly, but the amount of transaction is wrongly recorded. So let's look into the slide. The payment to Lim Wee Chai with cash of 7,250 is wrongly posted as 7,520. So to correct this error, simply reduce the original amount that should be recorded in the account and make a new transaction correcting the wrong amount to the correct figure. Okay, that is all from me for today. Thank you.
Now I will presenting about trial balance. As you can see, this is the trial balance of Top Glove at 31st August 2020. Trial balance is a list of ledger accounts with balances at a particular date. All accounts with debit balance will be listed in one column, and the account in credit balance will be listed in the next column. The element recorded in debit side is asset, drawing, expenses, purchases, and return inwards. While in credit side of the trial balance is liability, capital, revenue, and return outwards. The purpose of preparing trial balance is to check the mathematical accuracy of the double entry rules used, and also to help prepare financial statements, which are income statements and statement of financial positions. In this trial balance, we can see that the debit and the credit side is balanced, which show that there are no errors in the double entry.